So with that said, let's get into it. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay for the bailout. So before I get into what this means for the US and for China and the dollar, let me first explain how it actually happened, because obviously what the Treasury did was not approved or passed through Congress, wasn't voted on, and it didn't even come from the Federal Reserve. It actually came from a completely separate pool of money, and it's one that very few people even know exists. It's called the ESF, the Exchange Stabilization Fund. Now, the ESF was actually created way back in 1934 during the Great Depression, with profits the US made from revaluing gold. So at the time, President Franklin Roosevelt literally changed the price of gold from $20.67 an ounce to $35 per ounce. So all of a sudden, the US government just declared that its gold reserves were worth 70% more than they were the day before. That repricing caused a huge profit. It created a huge benefit of billions of dollars for the Treasury. But instead of letting Congress just spend it all, Roosevelt decided to lock it away in a new fund that could be used for emergency stabilization. The idea was that the Treasury could use this secret pool of money to intervene in currency markets for things like stabilizing the dollar, or if we really wanted to, getting involved in foreign economies without ever needing Congress's approval to do it. And for the last 90 years, it's been sitting inside the Treasury, and it was only used a couple of times throughout history that we know of, at least publicly. For example, it was used in 1995 to bail out Mexico during the peso crisis.
The peso also continued to collapse. It has lost 40% of its value to the dollar in the last 3 weeks.
Again in 2008 during the global financial collapse, and again during the pandemic to backstop credit markets when the Fed ran out of things to do, like lowering interest rates past zero. And now again this time to prop up another country's currency and by extension their economy. Now the question is this funded by our tax dollars? And the answer is yes and no. The Treasury isn't literally sending Argentina just a blank check, right? At least not directly. What they're doing is they're using something called a currency swap. Through the Exchange Stabilization Fund, the Treasury buys